Hey guys, Big Weir, roadtoroota.com. I want to talk about the latest news that made Bitcoin and all the cryptos fall, and that was that the CFTC released a primer on its take on the virtual currencies. Now, this is right in line with all the other government agencies talking down Bitcoin, saying we're going to regulate it. My take is regulation is a very good thing, extremely good thing, and proves the viability of Bitcoin. Um, what 7, 8 years ago, they were everybody was saying, "Oh no, the government would never allow it. It won't happen. Not gonna. It's gonna ban Bitcoin." Well, those days are clearly over. Absolutely over. Governments are looking to work with Bitcoin in the new system. They are embracing it. They just want to get rules around it, and they want to rid it of all the fraud that goes on, because it's massive fraud by the same players, the big banks and the hedge funds that are rigging the other markets. So yes, it's a very good thing that Bitcoin and all the cryptocurrencies are becoming mainstream and getting regulated, in my opinion. Now, remember, regulations only count in the countries that the regulations are put on. So when the CFTC goes, regulation of Bitcoin and the cryptocurrencies is only within the United States. They don't have a global outreach of regulation where they can penalize people in South America for doing something that the CFTC doesn't like. Every country has their own rules. Many countries will have no rules, and those are the places that many of the cryptocurrencies will thrive the most. But the United States doesn't want to get themselves into a pickle where it's overregulated and it stifles innovation, and people just go elsewhere to invent and create these companies, because the United States knows this is a huge part of the future going forward. So, but they also don't want it to run away from itself. So here's an article from Bloomberg, who is a mouthpiece of the manipulators, if you ask me. Bitcoin has just had its biggest drop in a month. And it's really interesting what they say. Traders waiting for a pullback in Bitcoin's price to rebuild positions in the world's largest cryptocurrency may have the U.S. CFTC to thank. So they're saying, the pullback is only because of this news, and traders are going to load up, which I believe to be true. But to instigate the coordinated move down, there's the news and selling of some real cryptos by the manipulators. So they'll get the price lower, and then they'll load up, and it'll go back and forth. That's what J.P. Morgan does with their silver derivatives. They drive it higher and they drive it lower, and they make the spread by suckering people in and then forcing it down and things like that. In a primer on the asset class published Tuesday, the agency said virtual tokens used in initial coin offerings can come under CFTC oversight, a message that a market adverse to scrutiny did not take well. I don't think it's adverse to scrutiny at all. I think scrutiny should be in the cryptos, so it was in the manipulation of the cryptos. Yes, it is manipulated, but they can't manipulate it as much as they do other commodities / stock markets, because the derivatives aren't there. Once the derivatives come, yes, the J.P. Morgans of the world and the Goldman Sachs and BlackRocks will be rigging the price up and down much easier, but right now it's difficult because they have to load up on a lot of crypto out on the rise up to sell it, because they can't do naked shorts for the most part. There are some derivatives, and on the exchanges, absolutely, it's mostly derivatives. That's why when China cracked down on their exchange, the total volumes went from 1 million Bitcoin a day down to almost nothing, because they took out that function of trading Bitcoin derivatives. I think all markets should trade on the blockchain, if you ask me. So most of the cryptocurrency markets are traded in derivative form, just within the ecosphere of the trading platform. It's only when you pull your tokens off the exchange that they turn into real transactions recorded on the blockchain. We've talked about this a little before. Bitcoin fell 8.4%, biggest loss in months, to a low of 5,109. The U.S. Securities and Exchange Commission has already said tokens from ICOs can be securities under its oversight. Well, we already knew that. The CFTC and the SEC and all the regulators are absolutely delaying putting any kind of constraints on Bitcoin and the cryptocurrencies because they want to flourish. They want that system to grow, and now they want to be strong. It is growing. The companies are being built, and now they need the strength of regulation to say, okay, no fraud, no J.P. Morgan rigging, none of that stuff we hate in the metals, which are, I mean, the hypocrisy of a CFTC saying we want clear markets and fair markets in anything is ridiculous, because they not only allow the manipulation of silver and gold on the COMEX, they are front runners of the banks, and they will absolutely raise their hand and say, no, there's no manipulation in silver, as everybody in the world knows there already is. So this article in Bloomberg goes on to say, everybody's looking to buy on the lows, which is interesting. And then if you go to, this is the actual release by the CFTC, and it's really nothing, and it says it's nothing. It's a primer on virtual currencies. It's getting us ready for the transition out of the old system into a new virtual crypto world. And you read through this thing. This primer format is intended to be an educational tool regarding emerging fintech innovations. It is not intended to describe the official policy or position of the CFTC, or to limit the CFTC's current or future positions of actions. The CFTC does not endorse the use or effectiveness of any of the financial products in this presentation. It is organized as follows, and it gives through what the cryptocurrencies are, what is this virtual reality that we are moving into. Interesting stuff about what they consider to be a virtual currency. And here's their take. Although precise definitions offered by others are varied, an IRS definition provides us with a general idea. Virtual currency is a digital representation of value that functions as a medium of exchange, a unit of account, or a store of value. In some environments, it operates like real currency, but does not have legal tender status in the U.S. Virtual currency that has an equivalent value of real currency, or that acts as a substitute for a real currency, is referred to as convertible virtual currency. Bitcoin is one example of a convertible virtual currency. Bitcoin can be digitally traded between users and can be purchased for or exchanged into US dollars, euros, and other real or virtual currencies. Interesting. It goes into what is Bitcoin. Interesting. They get it. They understand what's happening. Certain virtual currencies operate on public distributed ledger systems to capture blocks of transactions. There's no inherent trust in this decentralized system. I don't know what that means. There is no inherent trust needed in the decentralized system. Everybody trusts the decentralized system because they can see it and it's decentralized. Virtual currencies create an economic incentive for dispersed independent computers or groups of computers around the world to confirm transactions and perform verifiable work, to publish a new block of transactions in the public ledger in exchange for payment of the applicable virtual currency. Yes, there's absolute trust in the decentralized system. Hence the word decentralized, hence the openness of the system. So I think they're trying to say that there is no inherent trust needed in a decentralized system. Potential uses: store of value, trading, payments and transactions, transfer money, move money. And it's all cheaper than the current system, and faster and better. The blockchain or distributed ledger technology underpins many virtual currencies, but can also be used within private permission ledger systems. Versions of public and private systems may be used by financial institutions, governments, cross-industry for trading and payment platforms, regulatory reporting, know your customer, repurchase agreement transactions, general records management, title, all the things that blockchain technology can be used for. Now here's the interesting part. What is the role of the CFTC in the cryptocurrencies? The mission of the CFTC is to foster open, transparent, and competitive and financially sound markets. First of all, if that's the mission, then they have failed miserably on silver, on gold, on everything else. By working to avoid systemic risk, that's really what they're looking to do. They're looking to allow the rigging of the market to control systemic risk so the entire unbacked fiat system doesn't crash. The Commission aims to protect market users and their funds, consumers, and the public from fraud, manipulation, and abusive practices related to derivatives and other products that are subject to Commodity Exchange Act. They're supposed to do it, but they don't. They take that systemic risk thing and say, okay, JP Morgan, okay, Goldman Sachs, we need you to rig the markets because the entire system is going to fall apart. And that's what they do. And JP Morgan has admitted to that in court. They are an agent of the federal government. To foster the public interest and fulfill its mission, the CFTC will act, 1, to deter and prevent price manipulation or any other disruptions to market integrity, to ensure financial integrity of all transactions subject to the CEA and the avoidance of systemic risk, to protect all market participants from fraud or other abusive sales practices and misuse of customer assets, and to promote responsible innovation and fair competition among boards of trade, other markets, and market participants. That's all great. If they can actually do that in the cryptos, I would love it. Wouldn't you love a fair playing field for once in these markets? Responsible innovation is market enhancing. I agree. Here we get into the virtual currencies are commodities. So the CFTC is saying, now remember, this is just a primer. This is not law. They haven't defined any of this stuff. Definition of a commodity in the CEA is broad. It can mean a physical commodity such as agricultural product or natural resource. It can mean a currency or an interest rate. The CEA definition of commodity also includes all services, rights, and interests in which contracts for future delivery are presently or in the future dealt with. The CFTC first found that Bitcoin and other virtual currencies are properly defined as commodities in 2015. CFTC has oversight over futures, options, and derivative contracts. So they don't have, basically they're saying they don't have oversight over Bitcoin, but they have oversight of any futures, options, or derivative contracts related to the cryptocurrencies. The CFTC's jurisdiction is implicated when a virtual currency is used in a derivative contract or if there is fraud or manipulation involving a virtual currency traded in interstate commerce. That's interesting. So they could say, you know, if you're going to use derivatives to rig the market, that's under our control. Or if there's fraud or manipulation involving a virtual currency traded in interstate commerce. They're all traded in interstate commerce. So yes, I think they will have control of the fraud manipulation of the cryptocurrencies. Now, if you remember the DAO debacle, the CFTC came in, or the SEC came in and said it was a security. It should have never, it should have been traded as a security. They should have jumped through the hoops, but we're not going to penalize them because there are no rules in place. We're still at that point. There's no rules in place. So none of these ICOs that went off will be penalized unless there was fraud attached. And then the future penalties will be assessed after the laws are in place. And the CFTC has been absolutely dragging their feet on the laws. And it goes through a lot of the things that are interesting to the crypto people. So if you go to this website, cftc.gov, you can just do a search. Search of, let's see what the title is here. The title of this document is A CFTC Primer on Virtual Currencies. You can do a Google search on that, and then you can get this document. I think it's very important that everybody invested in cryptos gets this document. I think it is a great thing. It is leading us to a public acknowledgement that this is the way the future is going, and it will be regulated, absolutely. But every country has its own regulations. Some countries will have less regulations and will probably have more fraud, but also more innovation. So there's a balance between the regulations and stifling of innovation. But it should be clear to absolutely everybody in the world that the cryptos are not going away. So you can throw that argument right out the window. Anybody who says, oh yeah, the government's going to shut it down. No, they're not going to shut it down. They're going to regulate it. And because they don't want this new system to be like the old system where they get themselves in a bind and they have to allow manipulation of gold and silver and oil and the dollar and interest rates and everything just to keep the system afloat. They want a truthful, honest system going forward. And this is basically a little foundation paper on where the CFTC is going. And they're looking to add a lot to the criminals that are in every market. And hopefully they can do better with the virtual currencies than they did with what we've had for the past 100 years. Anyway, this is Big Weir. All in all, I say great time to buy cryptos, especially if you don't have enough or you don't have much. This is going to be a very short blip. Cliff High's data has November 1st and onward into July being the huge jump in virtual currencies, cryptocurrencies, the tokens especially, the companies related to that. China's coming out with their ruling the end of the month, and it will be much like the CFTC. We love it, but we're going to regulate it, which is great. Russia's already starting to adopt. They're talking about a virtual a crypto ruble. So yes, this is great news. The drop in the prices is a gift to anybody buying a cryptocurrency, and I don't think it'll last more than a week. So load up, my friends, load up. This is Big Weir, Road to Ruta. We'll talk to you later.